Listings are up over 32% year over year here in Greater Vancouver. That is an insane number. But what does that mean for the market overall? Does this mean a buying opportunity? Is the market just balancing out? Is this normal? In this video, we will cover the latest market trends, a full market update for February 2025 for the Greater Vancouver market as a whole. This includes detached homes, apartments, attached homes, townhomes, duplexes, everything. This way you can understand what is happening in the market in general. And this video is going to be broken down into three main sections. We're going to look at sales and inventory, we're going to look at changes in pricing, and then we're going to look at external factors and key drivers of the market and do a little prediction in the market outlook, short-term and long-term. But let's get into section number one, sales and inventory trends, how the market is actually moving. So first we're going to look at year-over-year sales, and then we're going to look at month-over-month sales. So year-over-year sales, total residential sales in February 2025 reached 1,827. This is an 11.7 decrease in home sales from the 2,070 sales in February 2024. And a year-over-year drop like this was to be expected because of the high interest rates last year. And we have felt this shifting buyer sentiment as early as February, March of last year. And as the year proceeded, we didn't really see much changes. While sales are lower than last year, this suggests that buyers are more selective. This creates more opportunity for well-priced homes. And despite the decline, demand is still stronger than pre-pandemic levels, which signals a healthy market overall. But let's look at month-over-month change, because this will show what change is like right now in the short term. The sales in January 2025 totaled 1,552 sales. It has increased 17.7% into February 2025, which I already mentioned had 1,827 sales. This shows a seasonal uptick in activity because January and December are typically slower times of the year for home sales. So this is really good to see. Of course, it is natural to see a rise in sales after the winter months, but the stats from January were looking pretty bad. A huge influx in listings, a huge decrease in sales. It looked like things were about to fall off a cliff. But right now, just looking at the sales numbers, we are seeing some sort of recovery. You combine this with falling rate cuts and then more rate cuts expected to come later in this year, as early as March 2025 with a 25 basis point cut expected on March 13th. This could be the start of a stronger spring activity. Now let's look at listings. We're going to look at listings again year over year, and then we're going to look at listings month over month. So year over year listings, there were 12,744 active listings in February 2025. This is a huge 32.3% increase from 9,634 listings in February 2024. It is a difference of over 3,000 more listings in Greater Vancouver right now compared to February last year. More listings means buyers have better selection and more negotiating power. A shift towards higher inventory will help prevent any kind of rapid price increases because there's more supply entering the market, keeping the market more balanced. And the listings in January 2025 were also pretty high historically for the year-over-year average. It was at about 11,500 sales for January 2025, and it increased 10.9% to get to that 12,744 active listings in February 2025. So a huge bump in listings year over year and month over month. A rise in listings suggests that sellers are becoming more confident about entering the market. Previously, there was a lot of hesitation with the high interest rates, buyer uncertainty. Sellers were not confident that they could get the best price on their home in the current market. And if they had the luxury of waiting for a better market and can time the market a little bit better, they waited. And right now it's starting to seem that some sellers are seeing this as a good time to enter the market. If listings continue to outpace sales, we could see a more balanced market with more stable pricing. So that was sales and inventory for the month of February 2025. Now let's move on to the next section, section number 2, pricing trends, how the market is actually moving. So we're going to look at year over year benchmark price. We're going to look at month over month change in benchmark price. And then we're going to look at the active listings to sales ratios, determine whether or not we're in a buyer's market, a seller's market, or a balanced market. Okay, so first of all, year over year change in benchmark price. The benchmark price for all residential properties in February 2025 was $1,169,100. This is down 1.1% year over year from $1,182,000 in February 2024. A 1.1% decline year over year suggests a cooling market, but prices actually have remained fairly stable. Despite such a huge change in sales and inventory over the past year, prices have only changed by 1.1%. For buyers, this could mean a great opportunity to purchase before potential rate cuts push pricing upwards. Because at high interest rates, pricing didn't really change that much, but at a lower interest rates, historically, we're expecting prices to start going up. Now let's look at month over month change in benchmark price. So the benchmark price in January 2025 was $1,173,000. This means there was a 0.3% decrease from January 2025 to the benchmark price in February 2025, which was $1,169,000. A $4,000 change in benchmark price. This is a small month over month decline, and it suggests that the market is stabilizing rather than experiencing a significant correction. If demand increases this spring, we may see prices start to rise if buyer demand does pick up like we are seeing signs of happening right now. Now let's look at the sales to active ratio. This will help us determine whether we're in a buyer's market, a seller's market, or a balanced market. So the sales to active listings ratio right now for Greater Vancouver is 14.8%. This indicates a balanced market. So anything between 12% and 20% is a balanced market. Over 20%, we're in a seller's market. Under 12%, we're in a buyer's market. So being in a balanced market means that prices are not going to change too much, and buyers and sellers have relatively equal negotiating power. Of course, it depends on the product, the type of home, the location, and the initial price point of the sellers. If ratios start to trend higher in the coming months, we could see pricing start to rise again. So now let's move on to the next section. Section number 3, key market drivers. What is influencing supply and demand? So first, let's ask, who is buying right now? In the market, we are seeing a lot of first-time home buyers purchasing because rates are starting to come down and affordability is increasing. The amount of mortgage pre-approvals that are coming in are starting to increase as well. Buyers are seeing the news and they're seeing these constant rate cuts. I think we're almost at 7 consecutive rate cuts. Now is about the time where buyers are starting to feel a little more confident. We're seeing a lot of families start to upsize, whether that is from a condo to a townhome or a townhome to a detached home. Seeing some depressed pricing on the market is actually a good thing if you're looking to upsize, because you're saving more money on the more expensive product when you're looking to purchase, even if you're taking a small loss on your sale. You're netting the difference. So we're seeing a lot of what we call conditional buyers in the market. These conditional buyers oftentimes need to sell their home before committing to a purchase. This can lead to subject to sale clauses on the buy side. And a lot of times I'm seeing that these offers are actually getting accepted. We're also seeing some investors start to creep into the market. They're seeing lower borrowing costs. They're seeing some really good opportunities in this market right now, with some sellers aggressively pricing to capture buyer attention. Well, it's working and it's capturing the attention of some home buyers. We're seeing this in the pre-sale market right now, where they're offering some really good incentives and people are leaning towards purchasing some of those products, because you can buy something that's completing in 2029 for the same price, if not cheaper than what's on the market right now. We are still seeing some detached home affordability being an issue, and it is pushing some buyers more into townhomes, condos, and then half duplexes actually. Okay, so now who is selling? So of course, we're seeing the upsizers selling. So they are purchasing a larger product and they're selling their older home. We're also seeing some investors cash out. So they're liquidating some of their assets because pricing has traded relatively flat. Maybe they want to move it into a different product or a different asset class, or may potentially enter the market at a different time. One thing that's really common with home sellers and home buyers, for that matter, is changes to lifestyle, because it doesn't matter what the market is doing. Sometimes your life will change, and it doesn't matter what the market is actually doing. Sometimes you get a new kid, you have a growing family, you need to have parents come live with you. These types of things, these buyers and sellers will always remain active in the market. What we're seeing specifically with sellers is they may be listing ahead of the spring market to hopefully attract early buyers. With interest rates falling, sellers are entering the market being more optimistic that they are going to be able to attract a buyer and get a decent offer. But because of the amount of inventory, sellers need to price strategically to stand out. Okay, now interest rates and financing. So the Bank of Canada has hinted at many potential rate cuts through 2025, which could impact market activity. We're expecting a rate cut in mid-March for like 25 basis points, and then a series of other rate cuts through the year. If rates do decrease, then more buyers could enter the market, pushing prices up. Buyers are going to be able to afford more at a lower monthly cost, which is good news for buyers, but it could also mean good news for sellers because it may be advantageous for sellers to wait for the rate cuts before listing their home on the market. Increased demand can improve overall sale prices. And then, of course, there are so many external factors right now with government policies, economic conditions, tariffs, global market shifts. All of these continue to influence the housing market. The economic uncertainty and potential foreign investment policies changing could definitely have a large impact on the demand later in 2025. I mean, we're already seeing this demand affect buyers feeling confident in making decisions right now in the market. So now in conclusion, we'll look at recommendations and market outlook. So in summary, for buyers, more inventory means better selection and more negotiating opportunities. And ultimately, this means better prices for buyers, and you're able to get the terms that you want, oftentimes a better price. And then subjects and contingencies on a contract that in a fast-paced market might not typically go through. Interest rate cuts could increase competition later this year for buyers. So if you're considering buying before the demand picks up, right now may be a really good time because there are still some great deals on the market. It is definitely recommended to focus on properties and areas with less competition because you are then able to secure the best deals. Okay, now for sellers, pricing competitively is key. Because right now buyers have so many options, if you're not going to cut your price, they're going to move on to the next seller that is going to reduce their price. On top of this, if you are priced right here on the market and the homes in this part of the market are selling, as soon as they sell, they're going to be replaced by a new listing at that similar price, and your home is going to stay stagnant on the market while you're being constantly undercut every single week by new listings. I am saying this because I care. Because if you are priced here and you are constantly getting undercut and the market starts to trend downwards, even if you reduce your price to where prices were, the market may have already moved past that, and then you might need to do another price reduction. So it's like chasing a ball down the hill. You want to go and get ahead of the market so that it falls to you. You want to get ahead of the ball so it rolls down the hill to you instead of chasing it all the way down to the bottom. I'm rambling a little bit, but I hope that makes sense. If you are not on the market right now, but you are considering selling, then I would wait for potential rate cuts that could bring higher demand and more offers. If you're looking to sell and buy, I'd get on it sooner than later because yes, you might try to wait and make more money on your sale, but when you're looking at purchasing, you might be met with more competition, fewer options, and you might be without a home for longer if you already sold. So right now is a really good time to do both. So now for market outlook, in the short term, we are seeing balanced condition, stable prices month over month and actually year over year, good opportunities for buyers, right? And then in the mid to long term, if interest rates do drop, demand can increase, which could push prices higher. So depending whether you're looking to buy or sell, if you're looking to buy, do it earlier. If you're looking to sell, do it a little bit later. And if you're looking to do both, I would probably start now. I think they're going to rise with the spring inventory, with the spring market around the corner, interest rates dropping. But I want to know what you think in the comments. Am I wrong? Am I right? Let me know. And then if you found this video helpful, please drop a like because it means a lot to me and it does make a really big difference. And if you like videos like this, market update videos, be sure to subscribe because I have more market videos coming every single month. I do attached condo, detached market updates for specific property types. I also do advice videos on what condos not to buy, what mistakes people make when buying condos, townhomes, and detached homes. So if that kind of stuff interests you, be sure to subscribe, and I will see you on the next video. Thank you so much for watching.